Okay, welcome back. Hopefully by now you've gone through the videos and modules on FIFO, LIFO, and weighted average. FIFO is first in, first out. We sell our oldest inventory first. LIFO is last in, first out. We sell our newest inventory first. And weighted average takes an average cost, a weighted average cost, which is total cost divided by total number of units. And it's the different number of units that gives it the weight in the weighted average. Okay, now let's talk about some of the attributes of the different methods. So in the first example, which is similar to the example we used for going through FIFO, LIFO, and weighted average, our costs are increasing. So on April 1st, it cost us $7 a unit. On April 10th, we started paying $8 a unit, and on April 25th, we started paying $8.50 a unit. So if we look, and we're still selling our product for $10 a unit across the board. All right, so you can see our cost of goods sold is lowest using FIFO when costs are increasing. It's highest using LIFO when costs are increasing, and weighted average is in the middle. So what does that mean? Cost of goods sold is an expense. So that means our gross profit and ultimately our net income will be the highest using FIFO when costs are increasing. It will be the lowest using LIFO when costs are decreasing, and it will be in the middle for weighted average. Okay, what about when costs are decreasing? When costs are decreasing, it's going to be just the opposite. And you can see here, we have the exact same number of units that we bought at the same time, or for the same amount. So 1,300 for $8.50, 900 for $8, and 800 units for $7 a unit. But we bought them in the opposite order. So now our costs are decreasing. They're getting smaller every time we buy. It costs less per unit. So in this case, FIFO gives us the highest cost of goods sold, and LIFO gives us the lowest cost of goods sold. Weighted average is unchanged. So from a gross profit perspective, we have the smallest gross profit using FIFO, the highest gross profit and therefore net income using LIFO, and weighted average is exactly the same. So why is this important? So if you are looking to just smooth your costs and keep things pretty much on an even keel and not have big fluctuations based on the price you're paying, the cost of your inventory, then you're probably going to want to use weighted average, right? Because we didn't see any changes. We had the exact same facts, it just changed the order that we bought things. If we want to maximize net income, then when costs are increasing, we'd want to use FIFO. And when costs are decreasing, we would want to use LIFO to maximize net income. If we want to minimize net income, then when costs are increasing, we would use LIFO. And to minimize net income when costs are decreasing, we would use FIFO. Now you're probably saying, well, that's crazy. Why would I ever want to minimize net income? And you might want to do that for tax reasons. Lower net income means you pay less taxes. Remember, we're paying the exact same amount of cash out for this inventory. This doesn't change what we're paying for the inventory. It just changes how we're costing it, how we're calculating cost of goods sold, which is going to be an expense on our income statement. So we might be incentivized to minimize net income in order to minimize our taxes. Either way, it's important to know how the different methods are going to react in a situation where costs are increasing versus a situation where costs are decreasing. One last thing I will leave you with. Once you pick a method of costing inventory, you have to stick with it, okay? You can't like say, oh, costs are increasing, I'm going to do FIFO, and oh, now they're decreasing, so I'm going to do LIFO instead. And that would be a way to play around with your numbers. Hugely frowned upon. Your auditors are not going to be happy with you, and in fact, they may not sign off on your financial statements. So if you have a very legitimate reason for changing your inventory costing methods, you can do that. You're going to have to write a lot of memos. and really justify it. But you can't just willy-nilly decide to change year to year, okay? So once you pick an inventory costing method, you're going to pretty much have to stick with it unless there's a really compelling reason to change. All right, that's going to conclude our unit on inventory costing. There's probably going to be a quiz or some homework to do, but this will be the last of our videos. So I will see you next time.